This is a very important week, and I figure I do a video and let you guys give you a heads up what's going on with the Nifty 50. So without any further delay, let's get into it. So this is the weekly chart. In the weekly chart, there are two important cycles here. I'm using data from like 2008 and on. The first one is the 191. And you can see that this is the weekly cycle I've been leaning on. Well, it tells me to be cautious with the Nifty 50. This one peaked around January. You can see that we went sideways, we went up, and the cycle is down. The next one is the 119. Now this one I have there is not as strong as the 191, but it's there, and it's just hit a trough, which is a cycle low, and now it's pointing up. So just in case I am wrong and the cycle is giving a head fake to me and maybe others, and it's going to continue going higher, this is your bullish cycle. And this one continues going on to 2024. Mind you, this is not as strong as the 191, which is this one. This one has a higher Bartel, and it's actually strong and has a good correlation. So just letting you know the two bull and bear cycles on the weekly chart. And then there's a dominant cycle, which is the 37. And this cycle now is down, and this one hits a trough somewhere around February 20th of 2023. And then the cycle goes up. So let's look at now the daily and see what the daily is telling us. Okay, so this is the daily cycle, and there are two that are important here. And one I'm going to show you, it's there, but it's not as strong as the other. The first strong one here, we've been using data from 2018. It's the 260 cycle, 260. And this one just peaked this week, January 2nd, 3rd, around there. And this cycle now is going down into May. And this one, in regards to the daily fluctuation, is important because this one picked up the swing low here. And now we're going down. So that means the cycles on the daily is down within this time frame. And we also have the 69, which is the dominant cycle. And what's interesting on this one is that this one's going to be hitting a trough, and now it's going to be going up. And the other one is the 145. It's up there. But it's not as strong, and this one is down. So you got two that are down. So you do a composite of the 260 and the 145. That's what you get. Now we do the dominant cycle, which is kind of creeping up. It's at 68.61 Bartels. This one is going up. What could possibly play out? Well, you could have this little. I know that we're fluctuating by the 1x2 right here. It could kind of dip in, and by like next week maybe pop. And maybe do a fail new high, or maybe even retest the high. So you want to keep an eye out for February the 8th around there. That's using the 69 and the 260. Now we want to put the 69 and the 145. Don't worry about the length of the drop. It's not that it's going to drop this low. It's just showing you the cycle. So don't worry about that it's going to go all the way to 1540. It's not the way it works out. It's just showing you the turning points. So January the 15th all the way to then February the 11th. Then it drops again. So those are the two. I mean, if you do all three, this is what you kind of get. Where you'll probably pull back around January, the second week, pop somewhere around the second week of February, and then drop. So that's what the cycles using the composite technique is indicating. So let's see how that's going to play out. But let's look at the other charts and see what the data and what's price action telling us there. All right, a couple of things to look at here. First off, let's look at the monthly. Just want to let you know that we're still bullish. Key level is 1492. And the weekly is still bullish. The only one that's bearish, I believe, is the daily in regards to our signals. And signal turned negative on December the 16th. It got negative, and it remains negative. So let's go to the weekly and kind of like break down what's going on. First off, last week's volume was pretty positive, but the last other weeks since pretty much December have been negative. So someone's unloading here, or recovering, or shorting, whatever's going on here. We know seasonality wise that January is weak, so we know that already. And we already know, and I already showed you the cycles. This one is the blue one. This is the weekly. This is the one that always has me concerned in regards to direction, midterm direction, short-term direction. This is the one I've been showing you. And now we peaked here. So knowing that we've peaked on the daily cycle, seasonality-wise, January is weak. We already know that. We got a MACD crossover on the weekly. We're interesting to see how this is all going to play out into January. Using Elliott wave, this is a wave 3, 4. And if this is a wave 5, then what we're expecting from here is an A, B, C correction. Now, let's say, maybe wave 5 is a little higher. Then that's when that positive cycle on the weekly, could probably, keep us pushing higher. Or maybe continue pushing higher. Or in the daily, the one I showed you where it pulls back and then it goes up around February, first, second week. Maybe that could be your last, head fake, bull trap. Even take out this so we could get everybody in, ignore the seasonality and then trap everyone out, and then, pull it down. So those are little things, the nuances you got to kind of have in the back of your mind, but know that this is a wave 5 until, prices continue going higher, then wave 5 will probably be further up. But as of right now, I'm using it as a wave 5. So that's that. We got the cycles taken care of. In regards to fib, there's a few levels here. The 78.6, it found support right there, that 17.812. And then there's another level you want to watch is that 17.930. It's kind of hovering around there. You see that there's some kind of support. Lastly, trend lines. And, trend lines are subjective, but I like to just put them on there because they're kind of quick just to see what's going on. You got this resistance line right here, and you got this support. And also with the Gann box or Gann grid, this is the 1x2. So it's finding a lot of support. It's just struggling here, just going back and forth, oscillating. We're going to, hold it, go higher. And then the bears come, and then, they'll try to push it below that angle. So it's a very important angle to keep an eye on. Let's hide that. And supply and demand, and we are in the supply zone. So this is all where the bears will camp out and want to push it lower. Let's look at the daily. Let's see what we could get out of there. So in regards to the daily, you see that, let's hide that. The volume is getting bigger. Today's volume is very strong. And yesterday. So those are the things you want to look at. And if we put the Hekanashi, you can see that it's already negative. We put it on the weekly. It's been negative since December of 12. So those are the little things you want to look at. So what could play out? Well, with just the cycles I just showed you, it could push down, and somewhere around the second week of January, maybe bounce up and try to regain. And then February, that's going to play out, push lower. But we all know that January is one of the weakest months. So be cautious. It's if we take out this 1777, it's going to push lower. So with that, and you can see that the MACD is still negative. Last 2 days have been a very bearish volume. Well, with that, I'll leave you. Hopefully you like this video, and I'll keep you posted on my thoughts on the Nifty 50.